Hello, Warriors. Some give back in the dollar. How are you? Ingmar, Blake, hi. How are you, buddy? AJ, Mike, Ingmar, Bran, Scott Williams. So welcome to Face. You new? Nice to meet you. How you doing, you Brit? Patrick, James, RC. Okay. So we're going to talk about this give back because I know that Ryan knows what's behind it. So Ryan's like my FX Walter Cronkite every time I come in here. You remember Walter Cronkite? How about that? All right. So what's behind the give back, my trading warrior brother?
Things not as volatile as was expected. That's probably the biggest thing that what we saw from yesterday. You know what we do as traders, you plan for the worst outcome and see what happens.
Yeah.
And
I mean,
it wasn't as bad as we thought, but we're not out the woods yet by a long.
okay. Wild action in Looney.
Yeah, Looney and Dolomex both pretty much
Yes,
the
I
same.
noticed that. Were there any tariffs announced or
Yeah,
what?
He said he's coming after Mexico and Canada as soon as February 1st, and that's what created the move.
Okay.
Yeah, 25. It started off, we got headlines that there were going to be no tariff orders day one. That's why dollar gained and MEX and dollar CAD dropped. But then it came out he's going to slap 25% tariffs on Mexico and Canada to combat illegal immigration, drugs and crime and all that sort of stuff. That's what sent the pairs back up again. But we're not talking about trade stuff yet. He's sending his bods out to look at all the trade deals and then decide what's going to happen when. Potentially April before we hear what he's going to do about the USMCA. So the trade tariff threat hasn't gone away yet, and that's what we're waiting for now.
Okay. I didn't know there was a lot of illegal immigration from Canada. I thought it was the other way, where Americans would sneak over. Anyway, that's a new fact. You know, just get used to immigration being the reason for everything, just like COVID was a few years ago. COVID was the excuse for everything, and now it's going to be immigration. Get used to that being the buzzword. So we got
always issues high in the agenda. Oh, sorry, my microphone.
Yeah.
There are always issues high in the agenda, Dale. And yes, you're very right. You know, once something is high in the agenda, then you attribute everything to it, right?
Right.
And so supposedly it will help you solve everything as well.
Exactly. Yeah. So anyway,
I think you've also adopted the Greek word panakia, right?
What's that? Panacea?
Yeah. Panacea.
Okay.
Panakia, it is the Greek word.
Okay.
Yeah, panacea. Yeah. So illegal, stopping illegal immigration will now solve every single issue the U.S. ever faced.
Yeah. Yeah. And, Musk is like that too. I mean, there's a reason why he's supporting every far right party in Europe. Okay. So, that's the way it's going to be. So anyway, to make money, to me, Aussie almost has the best look on this pullback. We're right at this. I don't think that Euro should take out 103 if we're going to call this a bottom. 103.5 was big. Okay, I'll give it this, and they could, take away this breakout, but I don't think they should take away the 103 breakout. Otherwise,
it's just back testing. That's all it is. It's holding up relatively well too.
Yeah. So far, it is. It's a break to buy. I mean, I think that you sell into dollar strength and okay. I was thinking about this last night. So we had no tariffs, was the thought yesterday, and dollar dropped 1%. Now talk of tariffs and the dollar comes back. So if we're truly in or about to enter a bear market in the dollar, as traders, I believe that we could use tariff talk as rallies to sell in the dollar every time. Just keep doing it unless I'm wrong, I'm dead wrong, and the dollar's going to, I don't know, 114, 120. But if those are the highs at 110, now we know what's going to create trading opportunities like today. So if the dollar is bad, the talk of tariffs today is a dip to buy, not anything to get bullish about the dollar. You guys, what do you think, Ryan?
Yep, I'm in that camp as well.
Okay.
There's still this. Take your euro dollar. Okay, we couldn't even test that 104.50 level. Okay, so that tells a story in itself. We just managed to get to the 7th January highs, 35.
Yeah.
So you look at the bigger trend from 112, we're still in it. You know, nothing's
Yeah.
changing there. But
Yeah.
we've stopped going down, and we can't get down to the lows again. And so that, you know, that gives you a bit of confidence now that maybe something is starting to change. The trend
Yeah.
hasn't changed, not at all, but things have to start somewhere. So my level for euro dollar is that 102.50 area,
Okay.
just under your
Yeah, that's a big,
103.
yeah, that's this line right here. So I
Yeah,
had this, I mean, it's an obvious trend line, so I had it drawn before we got up here. All right. It still amazes me how markets respect these things, but there'll be no more excuses for Euro bears if we start clearing 104.5 on a close, not just poke through it, but have a nice close. And then if you believe Edwards and McGee and their belief about how much falling wedges can or rising wedges can retrace, it's 100%. So if I'm anchoring it here at 11 and a half, 112, then that's a potential move coming out of this wedge if it does. And I
yeah.
rest my case.
But I'm going to put a fly in your ointment, Dale.
Okay, it's all right. I
There's
like that.
there's always two sides to a currency, you know, and based on
Yeah,
what's going on in Europe, would you be buying
right,
the euro, let alone selling
right.
the dollar? Would you be buying the euro on the fundamentals in Europe?
I'd be buying the euro based upon the action in euro pound. So I mean, to me, this is more important than any news because look at the news didn't turn better for Europe on this, but
Mm,
the action flow, the flows changed at least temporarily. I mean, so this already did what perhaps this is about to do. Remember, I gave the lesson about how if if euro makes new lows without euro pound, that the spread turns before the market. Well, when euro was making new lows, here we were in EG. Okay, so we weren't making new lows with the euro making new lows. So maybe this is foreshadowing a falling wedge breakout for this. We'll see. Um, I guess we could talk about risks today. Besides gold flying again, gold is flying, lots of new highs. Gold silver ratio still, I think, wants to, keep going. And then we could talk yields, but why don't we talk about risk since it had a day off? It had a little bit of whippy action. You looking for 61.40, 61.90 here, Blake? New highs?
Yeah, I think the S&P hits new highs. Now, what I was surprising last night is when you and just so everybody knows, like I told this to the chat room when I got there this morning. It's really, yesterday was a stark reminder that we're dealing with a completely different world for the next 4 years. Like if I would have not held on to my positions, because I was short dollars yesterday, I was positioned really well. I think I was up 80 pips in the euro. I bought it actually right as we wrapped up this show yesterday. I bought the euro at a really great price. And literally by the time I got back to my computer when that headline came out, I'd given back pretty much all of my profits that I made yesterday when Trump announced that that 25% tariff February 1st for Mexico and Canada. And then after that headline came out, I managed to make back all those profits over the next 30 minutes. The point to this story is that I should have just closed up everything at the end of the day yesterday. And then if I would have been flat during the headlines, I would have really doubled what I made yesterday. Instead, I had to spend, 30 minutes of my evening scraping back, what I'd made, earlier in the day. The fact of the matter is that we're in a different market right now. So,
yeah,
you
got to take it while you have it, I think now.
You do, at least, and Ryan said this during the Flow Show. If you guys haven't listened to Ryan's Flow Show, make sure you go back and listen to it. And I agree with you wholeheartedly, Ryan, at least for now. For right now, for the next few weeks, it's going to be very volatile until we kind of understand what his policies are. So you need to take what you have off the table when you can, and at least probably for the next few months until the dust settles, right, Ryan?
Yeah, exactly. Things will calm down once we know all the tariffs and what he's going to do with trades and policies. Things will settle down a bit. But we'll still have the headline risk, of course. But we will settle down, and we'll switch pretty quickly back to trading central banks. We got 7 central banks from tomorrow through next week, and they'll be back in focus again.
Dale, did you want me to take the screen so I can?
Go ahead.
Sure.
Go ahead.
Okay. No, I was just I noticed you stopped sharing, and then I was going to grab the screen, then you grabbed it again. But we can look at a lot of different things, and I want to point out just regarding the euro. This is you guys were having this discussion about the euro. The euro is really, Ryan, you pointed out, it hasn't been able to get above this 104 and change. That's a 24% retracement of this complete drop. And Dale, you had it as a wedge. I still see everything as channels, but some of them are broken, like the euro broke that channel. Aussie channel is broken, and we're back testing the channel right now. Kiwi stopped at the channel resistance yesterday, and we're holding below it. And sterling's obviously trading like crap because it's sterling. But we are starting to see signs of life for dollar weakness, and the euro. I don't want to get too bullish here because it is, as Ryan, as you just pointed out, there's two sides of the story here. It is the euro, but at the same time, we haven't been able to take out the 24% retracement. It's just a 24% retracement of this entire move here. If we take that out, maybe there is a bit of a recovery, but it has to be on headlines. I don't know if it's going to be anything that's not headline driven. Another thing that I think we're going to have to deal with, especially today. This is the first day that the market is going to be open after the Trump inauguration. So seeing how the market responds today is going to be really interesting. I know futures are up just a little bit. I mean, they're basically flat, but
look at 10 years. Look at 10-year yields. We've gapped down, but dollar isn't following
yet. And that brings up another point. We remember it's not just the US. We also have the Bank of Japan. At the very end of the week. It's on Friday, I know, but you look at some of these yen pairs, and I just want to share with you like some of these yen pairs. They're actually fairly vulnerable looking. Like you look at the euro yen, and I know we're pretty much mid range here. We're mid range in this triangle. The guppy or the pound yen, we're consolidating below this broken trend line channel. Aussie yen is not too far from the 78% retracement. My opinion would be if we take this out, Aussie yen's in trouble. Kiwi yen, very similar, 618 retracement, very, very similar situation because we start taking out some of this support and it's going to start looking ugly. Canadian yen, I shorted this last night and I got in and out of it after the tariff news, but I shorted that and made made a few bucks. But man, if this takes out channel support here, we could really look to lower levels. So you start looking at like some of these yen pairs, and you have the dollar yen, which you're talking about yields. They had come down, Ryan, and that's why I wanted to talk about this. Dollar yen, it's stopping right here at this 127% extension, 155. But notice how we're making lower highs as well. So, I'm looking at these yen pairs as being vulnerable if we continue to see this move lower in yields. What's the move lower in yields telling you, Ryan?
At the moment, it's showing a bit of the tariff risk washing out. Potentially, but the point I wanted to make, or I tried to make on the flow show, is that you've got to look at yields and why they're moving, and it's very important right now to know why they're moving. We saw yields, US yields, going up to their highs over the last couple of weeks. We saw the dollar moving to its highs of the last couple of weeks, and that's what I'm saying today. We've seen yields come off, but those dollar pairs like euro, dollar, cable, they're just about getting their forehead off the mat. They're not rocketing all the way back up again.
Mm-hmm.
And that's the difference. Look at UK. UK yields went up. The pound didn't go up. The pound went down, because the reason yields went up was because of investors losing confidence in the UK. So that's a negative. So it's going to be the same with the US and Trump. Are his policies going to be good for the economy? Are they going to be good fiscally, or does it mean it's going to put pressure on US borrowing and the ability to pay back debt? If that's the case, then yields go up, but the dollar likely goes down. So, it's like I've been saying, there's no straight paths over these next few weeks until the picture becomes clearer as to what is driving any one asset at any one time. And you've got to learn that, and you've got to learn it quickly, because that tells you then how to trade. If US yields are rallying because the market is getting cautious about the US being able to pay back its debts, that's not good for the dollar. Whereas before, rallying yields was good for the dollar.
I want to talk to you guys about a concept, and matter of fact, I see that Steve is here as well, and we'll get his input as well. I was in the chat room, and if you guys aren't in the Forex Analytics chat room and having these conversations with us and being able to read it and talk to us about it, remember, it's only $1 for 10 days to jump in here. I'm not going to go all the way back to the conversation from yesterday, because I'd have to keep scrolling back to yesterday, but I want to have this conversation because I think it's important. Dale, you might have some input too. If you look back to Friday, Trump had a conversation with President Xi. It was reported in the in the mainstream media. There was a conversation. Apparently, the conversation went well. And what you noticed is when he took office, the transition team's like, we're not going to have any tariffs on day one. I pose a question: who's the largest holder of U.S. Treasuries right now? It's China, right? China and Japan. I would say Japan would be number two, and maybe they're number one. But I think the bigger worry is, you have this sell-off and you've had this sell-off as Trump has won, and yields have gone up despite the Fed cutting rates. We've had yields go higher, bonds move lower, notes move lower, fixed incomes basically move lower. I wonder if, Donald Trump had a conversation with China, and there's a deal in the making to eliminate, for them to stop selling so many treasuries right now, because yields are going higher, and it is going to cripple the U.S. economy if yields continue to rally. So I wonder if there's a connection there. What are your guys' thoughts? And I'll start off with Steve, since we haven't really heard from Steve yet.
Hey, mate.
Hey.
Ask the question again.
Dale,
Make it very short.
Trump talked to China on Friday. He didn't enact tariffs on day one, as everybody thought. Is there a connection there? Because we've seen the bond market, some of that selling subside since last week. maybe there's a connection between,
There is definitely
China.
some kind of a negotiation taking place there, and I think it has begun, you know, even before Trump took office. I mean, probably weeks before Trump took office. I'm pretty sure about that.
Yeah,
Right?
and like I said, China and Trump, Trump and Xi had a conversation at the end of last week, and like I said, it kind of went under the radar. And I believe that there is probably some sort of negotiation happening
For
that's
sure.
keeping the because they would be the equivalent of the bond vigilantes. Everybody's talking about the bond vigilantes. They're selling fixed income, and yields keep going up. No matter what the Fed's doing. The Fed's cutting rates and yields are going higher. Why is that? Because everybody's selling bonds. Well, if Trump had a conversation with Xi and they've like let off that valve a little bit. Could it be? And George says correlation is not causation. I agree with that, but we are seeing pressure come off of fixed income, which is allowing yields to come down, and that goes back into the conversation that we're having right now. Ryan, what are your thoughts there?
I couldn't rule it out. He's already said that he needs to go and look at the trade deal, the agriculture deal that he had with China that they've not adhered to, and that's going to be a problem. So maybe just put some feelers out. Trump likes to make a deal, so you can't rule out a deal coming. Does he need to wave his big stick a bit first? I think maybe that's more the opening conversation with Z. I'm coming into power. You need to toe the line, or you're going to get spanked with tariffs again.
Well, let's not forget. China needs a deal too. China needs their economy is really suffering right now. I mean, as far as we can see, and
Yeah, but you need to keep something in mind here, right? Only one of those two countries has practically a democratic elected government that has to, to account for how things are going and be responsible and be judged every 4 years by citizens about how by economic performance, etc. Meaning that between the two of them, only one of them can really play hard and even go through the hardship if needed.
Bingo.
Yeah. Well, anyway, it's just these are the conversations that we have inside the Forex Analytics community. It's food for thought. And this is probably one of the best images because this is what happened last night. That's exactly what happened last night, just so you guys know.
Well, it's a toilet seat up or down?
The toilet seat is down. It's down.
So so at least it's a good play. I know you told me when I first started working with you that you would bring your iPad in there and
Oh,
do a
I
lot
still
of work
do.
on.
I no, but now it's
See
just
how
my
I remember
phone.
that?
But yeah, I'm always I'm mobile trading all the time, even in the shower. I've got my phone sitting next to me, and I can
It can
see.
get wet.
No,
That's
it's
good.
Outside of the shower, outside of the window part of it's sitting
All
perched
right,
up
man.
there. Anyway, so guys, it is going to be the bottom line is it's going to be a crazy 4 years. I do agree with Ryan. At least the next several weeks, you guys are gonna have to be very careful, myself included. And the story is true. I made good money yesterday on selling dollars, and I gave away all the money, all my profits basically when this happened last night. When that happened last night, I gave away all my profits, and then I spent 30 minutes making back all of my profits. Fortunately, there was good volatility after that, which taught me the lesson that I'm trying to convey here is take your profits when you got them, at least right now, until we can find more concrete evidence on why things are moving. But it is very, very choppy waters out there, and we have to be very careful. Let's do this really quick. Ryan, what are you looking at today? We are seeing a little bit of a we got yields coming down. The euro's finally starting to find some support after pulling back to the channel breakout point. You can see this broken channel We just came back and respected the trend line. It's basically 103.40. As long as we hold above 103.40, it looks like we're getting some buyers coming in. But what are you thinking right now?
Ranges, mate. That's what I'm looking at.
Okay.
We hit 104.50 is the top side range that I've been looking at since forever, since we broke down below it.
Yep.
And down into that 102, what is it, 50, 60-ish area, those lows that you can see.
Yep, down here.
I have a little bit of a different Euro USD chart. You'll see it later today because it's my chart of the day today.
Okay, great. Well, then
Cool.
Everybody will be looking forward to your chart of the day. Steve, real quick before I come to you, Steve, what else are you looking at, Ryan, as far as you got the Euro range that you're looking at? Hopefully we get maybe some tariff news regarding Europe, pushes the Euro down to 102.50. You can take advantage of that. Anything else that you're thinking?
Dollar CAD's obviously interesting. Again, we
have CPI coming out here in a second.
Yeah, we had a move to the bottom of the range, and then we blasted through the top of the range, but we're back in the range. So that gives you an indication of what the market wants to do. It's happy to move, but it's not ready to go anywhere just yet. So
you know what's interesting? I was just going to say, you know what's interesting, Ryan, is I deleted it because I was looking at, I wanted to sell the move to 146. It's actually one of my setups from the week ahead video. I deleted that yesterday because I was like, well, shit, that ain't going to happen. But then after that was, early yesterday before the tariff news came out. So now we just hit the 127% extension, but it's possible we could still get up to 146, wouldn't you say?
Yeah, it's possible, but it's going to need something more than what we've had already. It needs something to drive it up there.
Yeah, I mean, because now we know that there's 25% tariffs February 1st. Worst case scenario, that's what we're getting, and that wasn't enough to drive us out of this range. Is what you're pointing out. I mean, that's a great point. Steve, what are you? I know you're going to look at the euro. We're going to see it for the chart of the day. But what else are you thinking right now?
You want more?
No, I was asking Steve. Steve.
What? Am I supposed to watch more than one chart of the day? Oh, that's very demanding, mate.
Anything else that you're looking at?
Plenty of the markets with yesterday's move came to areas that are technically significant, right? And the euro is not obviously the only one. We have the Aussie and the Kiwi, which are trying to break higher as examples. We have the Canadian dollar that after a long time is trying to break down. Plenty of developments.
All right. And speaking of Canadian data, we got it coming out in about 2 minutes, which we'll cover here live. Dale, what are you thinking this morning before you take over and interview Harold, which happens to be here? Harold Malmgren, great person to have here, especially after yesterday's inauguration. But what are you thinking right now?
Continue to look to sell dollar strength until proven otherwise. The bounce in the dollar index today, not that impressive, kind of back to that breakdown. So, there's plenty of leeway between today's high and the high of the move in the dollar. I'm sticking by my conviction that we're peaking up here. If you put up a weekly dollar, people thought they were late to get short the dollar yesterday, and that's not. It could just be beginning, and Blake's weekly chart will show it here. And there it is. So put up the weekly. Okay. So now you go to the left because we want, all right. So if you were late in September of 2022, say you didn't sell the first 3 weeks, were you late?
Yeah.
No. Okay. So, I think we could have a move like that from the highs that we're making here. That was 1,400 pips.
All right. We have CPI coming out in Canada here in just 1 second. I'm looking around. Do I have any Canadian exposure? No, I do not. Okay, good. So I just want to double check. So let's see what that data comes out as. I'm assuming it's going to come in a
see
little
you,
weaker.
Harold.
Yeah, Harold is here.
I know.
Let's
I
just
see him. He raised his hand.
Oh, okay. Canadian CPI, little
Hot on the core.
hot on the
One of the
core,
cores, the BOC core, was hotter.
Yeah.
It's a bit mixed. The trimmed
Yeah.
mean, median was a little bit lower than last time. The common CPI was unchanged. Headline CPI, there or thereabouts as expected, 1.9%. So
all right. And I think you make a great point with the Canadian, Ryan. We got news. So and that failed to break us out of that of this range that we're in. So we're going to need something more to get the dollar CAD above 145. I personally believe that there still is a chance that we can sell a 146 level, but you make a great point that it hasn't done it yet, even on the news that we got. So what else are we going to get that's going to push us out of there? So I think you make a great point. I don't have any Canadian exposure right now, but great points there all around. Guys, I want to thank you all for being here, everybody for being here this morning. Remember, Forex Analytics, $1 for 10 days. Come jump in our community so you can have these conversations with us and see beautiful images like this all day long. That joke, that was from earlier this morning, but have conversations with us talking about the markets, because it's the best place to be around. And you can actually know, that I sold the dollar yen at 155.73 about 23 minutes ago. So, if you want to know those positions that I'm taking or Ryan's taking, because he posts his stuff in here, so does everybody else. If you want to know what we're doing, and come into the Forex Analytics chat room. All right, Dale, it's
You
all
just made a
yours.
great point, Blake.
Mhm.
A lot of people subscribe to signal services. Okay, so in the room you get signals, plus you get education. So why not have a signal service if that's your thing, to not have to think and just go with someone you know is pretty good. And you might be enticed to learn to be able to do it yourself one day. So that's what could happen in this chat room.
Yeah, and
Signals plus education.
it is, and I want everybody to know it's not a signal service, but if you know, okay, Blake's short dollar yen,
Yeah.
20 minutes ago, and you were looking to get long, you could always ask me, hey Blake, why are you looking to short the
Yeah,
dollar yen? And
there you go.
I'll tell you, hey, it's a lower high on an hourly basis, and we got the BOJ upcoming this week, so that's why I'm selling into this rally, because we're not making higher highs. And you can go, oh, okay, I can live with that. So, but being able to learn, that's important.
Yeah, so it's kind of like what people do with the presidents, and I'm going to ask Harold about it, is that they buy access to being
That's right.
able to go right to the source and be able to ask the source instead of getting things secondhand or much later than it's happening.
Right.
So thank you, Blake, and thank you, Ryan.
thanks, mate.
Whoops, we had a little mic drop there, and appreciate it. And
thanks, Coach.
what a great guy to talk to, Harold Malmgren. Harold is really has so much experience going back to the 60s with being part of different administrations, even during the Cuban Missile Crisis. So, Harold, welcome back. You must be having a field day with this. Is this one of the more surreal political situations that you've seen in your lifetime?
This is total drama. Everyone is expecting huge changes, but the big debate in Washington already is how long does it take to make the changes?
Right.
Trump can sign an order, but between then and action, we're going to see an avalanche of suits in the courts. For example, minutes after he signed several of the executive orders, several suits were filed to prevent the Musk's commission from operating without major changes according to federal law. So all kinds of obstacles will come, and it will look very confusing. Now, first thing I noticed this morning is that Trump said, I want to travel to China this year.
Yeah.
Now, that's very important because it means that he's not going to do anything dramatically painful to China before he gets there. It means he's already started a dialogue with China about many things.
Right.
And that will take months because so many different issues. But it also means China's not going to attack Taiwan when a meeting with Trump is pending. So that's really important.
Okay. So we could at least put that back, until negotiations don't work out. If they don't work out or there's tit for tat, then Taiwan is back on the table, but not until then.
That's right.
Okay, good takeaway. All right. So we don't have to worry about that. What's he going to do about Ukraine, Harold?
I believe that talks are already underway with Putin. So probably there'll be some announcement within days to start some kind of ceasefire. And the question will be, will it be just a ceasefire or will it be an armistice with, agreed borders and boundaries and all that stuff?
So like Korea, like how the Korea War ended.
Like that, yeah.
Okay, so and Zelensky has no choice but to go ahead and give up territory. Will Russia have to pay for reconstruction? Who's going to pay for reconstruction there? No one?
No,
or us?
We're going to encourage the Europeans to use Russian debt.
Yeah. Okay.
We're going
So
to make Russia
so they could use the frozen Russian assets to rebuild.
right.
All right. Okay. So let's get to the economy, because that was really, I think, a major factor was the inflation shock that people just couldn't deal with. And I'm not just talking about people on Social Security. I'm talking about anyone who makes less than 100K a year. Was really eating into their safety margins to where they didn't have margins. And you're the poorest guy in Southern California if you make 100 grand a year. Okay, if you're working. So do you think, like, I'm looking for a turn in the dollar? They want to turn in the dollar. Yesterday, they were successful by dollar dropped 1%, given, recovering today. Do you think they're going to be able to have their way with a weaker dollar by favoring bringing, jobs back, and we're moving more towards taking care of labor than corporates? It's a fuzzy area for me right now on the economy. I know you were bearish bonds. Druckenmiller says we're in the seventh inning. Do we have to have a sovereign debt moment like the gilts did a year or so ago in the UK and continue to have trouble before we see a peak in interest rates?
I think start from a simple premise. Trump is not going to raise taxes. He's going to find ways to cut taxes some more and extend his tax cuts from last time he was president. And he wants to cut spending, but now they're looking at the numbers. They're already saying, we're not going to be able to cut 2 trillion, maybe 1 trillion. And then behind the scenes, the people working on the numbers saying, we're not going to be able to cut spending a trillion.
Yeah.
Now, what I read in this, the deficit is going to be bigger in 2025 than it
Yeah.
was 2024. Now, the bigger the deficit, the more we're going to have inflationary pressure rebuilding, number one, and second, the dollar, the long-term interest rates are going to go back up. So you remember the last time we talked, I said we'll be approaching 5% for the 10-year and even more afterwards. I think we're still on that track.
Okay, so this little easing pullback in yields is just a correction in the market, maybe back to 430, 450, or maybe it's almost over and we're going to start heading back again. But let me ask you about the duration risk because, TLT is a pretty good example. We've had a little bounce. Do you think we're going to continue to make new lows? Because if we take out this 85 level in TLT, that opens up, new lows. This is, pretty important technically for it to hold. But if we start taking out, see how many times it held 85, Harold? If we take out 85, you could start talking about the lows again. And maybe even, people get shocked when I say TLT could trade down here at 72. Are we going to have a sovereign debt crisis under the watch of Trump? Is that going to be his first test that markets become disorderly because of bear market and bonds?
No,
Okay.
The market will be patient. You got Besant at Treasury, who is a real expert at manipulating markets. So I don't think, I think developments will come slowly, but the Fed is not going to continue cutting.
Okay.
The Fed is going to stop. And then the Fed may begin to raise if inflation starts to pick up, which I think it will. I think we will see inflation gaining, if not the first quarter, certainly the first half.
Okay, so people that ask you, Harold, we've had an unbelievable, unprecedented bull market in equities, 3 years straight, 20% returns. You never had to look at the market. You just owned your spiders and drove your golf cart around and golfed for 3 years and just kept getting richer. Do you think that the nature of Trump is going to change the nature of what we've been seeing in the markets the last 3 years? Because he judges himself by stock market performance.
Yeah.
He pays attention.
Breckenridge yesterday said he senses animal spirits are running strong and will continue to run strong. So it's no resistance, all out. No, if he's got 40, almost 50 years experience, when he says animal spirits are going to run strong, I think you have to assume that will prevail for at least a few months.
Yeah. Okay.
But the employment numbers are not going to look red hot. So
the animals. So it's going to take the euphoria over red sweep and Donald Trump having a second term is enough euphoria to keep the markets going maybe another quarter because Druck is he's bearish the world.
Right.
So this is going to be a year where we have to look to take profits when animal spirits are still running wild before someone takes a bow and arrow and takes them down, which is probably going to be rates, right? Huh? Those animals running around in the forest. There are hunters out there.
Yeah,
So
I think
huh?
you put your finger on it.
Yeah.
The markets will look strong until it begins to look like rates are
Yeah.
heading back up.
Yeah. Okay. So it's really going to be the bond crisis. Since you take Taiwan, because I know a lot of bears were thinking that, the way China's been buzzing Taiwan, it was on the table. So that's good to know that, it's off the table, except you never know. There has been deception before wars have broken out, where didn't the Japanese send ambassadors to talk to Roosevelt right before Pearl Harbor?
Yeah.
Okay, so I mean, maybe that's what the Chinese want us to think, is that we don't have to worry about Taiwan because Trump wants to talk to him down the road.
I think China is in much worse trouble.
Shape than us.
Yeah. And she is beginning to get pushback from the wealthy Chinese and from the people in the streets. The
Okay.
unemployment rate is starting to run up for under 40. I mean, it's, under 35 years old, the unemployment rate is now running 40%.
Yeah, and they can't find wives.
Right.
So here's the Chinese currency. Most traders were afraid that the Chinese were just going to let the yuan go, and that would have been much higher levels, right? Doesn't look like they're going to let the yuan go. Looks like the yuan is starting to come back and appreciate a little bit against the dollar. You have a view on what they're going to try and do, or what they have to do currency wise, and with all the problems that they have? There still are some people that are bullish China, that are buying China assets.
Yeah. This treasury doesn't, I think, will probably have a chat with the Chinese. Do you want us to help keep the yuan stable? In other words, volunteer to have some quiet cooperation in the currency market. So bear that in mind. That might be part of preparation for a Trump visit.
Okay, you know what? These charts don't look bad. So this was the explosion that, FXI had. I forgot, was it their first round where they were going to do everything that they had to do? I mean, China went up 30%, and all we've been doing is consolidating. There could be another wave up in China, it looks like to me. So I would say that smacks of cooperation, or that they may have solved things for a while.
I'm not sure they solved anything, but if the U.S. and China quietly cooperate, that's going to prevent it.
All right.
Yeah.
Okay. Let's let's go to another part of the world. So ceasefire, Israel, Gaza. Nothing's happened with Israel and Iran. I thought that Trump and Netanyahu still have a target on Iran, and Supreme Court justices are getting assassinated in Iran. The people aren't that happy with the regime. Are they going to do something there and then hope the people rise up and take over the country?
I believe that is possible. I think between Netanyahu and Trump, there is a desire to raise the heat on the Iran religious leaders. And we probably will get our military ready to support a direct hit on the Iran nuclear weapons facilities. Yeah. So, I mean, I think as far as Trump is concerned and his people, Iran is a troublemaker, and if the closely were not in charge, everything would be much nicer in the Middle East.
Yeah. So, I mean, they also have support. I think there are other countries in the region that would be happy to see an outcome like that.
Absolutely.
For example, Saudi Arabia.
Absolutely. Yep.
Okay.
A lot of regional support for heating up the pressure on Iran.
So what have I missed that we haven't touched on today? Anything that what do you think? Give me an adjective for the year 2025. Can you come on, just off the top of your head, but 2025.
I think we see lots of strong intentions, but much confusion in the first year of Trump, because everything he wants to do will turn out to be much more complicated, much harder to do, much more involving the courts.
Yes.
And as I said at the outset, they've already figured out they can't cut spending much. You know, they started out with being a cut spending $2 trillion. Then the last few days, 1 trillion. And now they're saying they'll never get 1 trillion cuts. So realism is sinking in, and Musk is enthusiastic.
Yeah.
But I've been around government now, more than 60 years. I've been through many changes, and everything now is going to turn out to be much more complicated than ever before. So it's going to be very, very messy.
Okay, so you know, the animal spirits run until people realize, you know, what everyone promises on the campaign trail is one thing, governing is another thing.
That's right.
Even with all his extended powers in the court, really giving free rein, a president has never had more power than this president after the latest Supreme Court rulings, right?
That's true. But let's stop for a minute. The Supreme Court is not the only court. So if you get tangled up in the lower courts, it takes a year or two to get to the Supreme Court.
Interesting. Yeah.
Courts move slowly.
Yeah. Yeah. All right. Well, okay. So that's going to be it. So, yeah, you know, I heard someone, you know, there's a big discussion on property rights. Some guy who wrote a book called The Great Taking, that all of our assets, because of the way the law is written, aren't ours. Okay, that we don't have legal claim to them, like stocks and bonds and financial assets. And people that are fighting to change it are saying, you know, don't call your, you know, senator or congressman, that the way to do it, if you're interested, is to go to your state legislators, because they care.
Let me add one thing to everybody. You know, I worked directly for the Senate some of those my years, and the lesson I learned from individual senators, several different senators said, how there's 100 people up here in the Senate. Every one of us privately believes we could do a hell of a better job than whoever's in the White House, but we haven't had our opportunity yet. So it's not natural for the Senate to continue to cooperate on everything. And the Republicans are having a really hard time staying together. But what I see is that the Republicans chose Thune as their majority leader, and Thune is a consensus builder. He's going to resist on many points Trump pushing something, and he'll say, let me build consensus. We may be able to get halfway where you want to go, but not all the way. We're going to see a lot of bargaining but it's not going to be, the Senate will not be rubber stamping everything.
Okay. Well, they rubber stamped the removal of the head of the Intelligence Committee.
Yeah. Oh, yeah. Look, first few days, they rubber stamp everything.
Right.
But I'm saying, months or two from now, the rubber stamp will just, somebody's going to lose the
because they all want to be president and they don't want to make the wrong vote, right?
Absolutely. Many of them are thinking already, he's there for years, but it takes 2 years to get ready to run. So I better get ready pretty soon.
Yeah. All right. Well, you know what I've been saying lately? God is my president. Anyway, if and he's in charge. So anyway, it was so great. It's always so great talking to you, buddy. You know, I really look forward to it. People are going to need your voice right now, Harold, to understand what's going on. I'm as confused as everyone else. All I have are my charts, these little squiggly lines to guide me in the market. But I know I and our community appreciate all the experience and wisdom you bring to the table every time we have a conversation. I want to thank you.
Thank you. As you know, I worked for both parties.
Yes.
And that famous moment with Nixon, when he
Yes.
had in the Oval Office, he said, "Damn it, I have to tell my people, are you Republican or Democrat?" And I said, "Yes." and
Yeah.
he said, "What does that mean?" I said, "I'm a problem solver."
You're right. That's universal because everyone has them. I don't care what party. So, Harold, thanks so much. I'll get a hold of you and we'll talk in the spring. By then, we'll see if the animal spirits have gone in and hibernated. We'll see what happens in the spring. There will be growth in the spring. That's a quote from Chauncey Gardner.
Yep. Well,
Remember. All right. My friend Harold Malmgren, everyone, follow him at Hale's Rethink on X during a huge political transition and very important inflection point in American history. Harold's the best source out there. Thank you, buddy.
Okay, thanks for having me.
All right.
Bye-bye.
All right. All right. Bye-bye. So that's a wrap, everyone. You could join the team in 17 minutes. Dollar is, starting to give it up a little bit. So we'll see. Inside Day tells me I have a trade setting up for tomorrow. Okay. Good hunting. Remember, don't just count your pips, count your blessings. Me and the team and me will see you later. See you tomorrow. Good hunting. Adios. You're welcome.